Hello my fellow investment gurus and welcome back to the channel. We are as always giving us this little weekly update, and we are looking a bit at the news, what is happening in the world right now. And at the end of the video we will be looking at some quite promising numbers for our 5 strategies that we track here. But first of all, there is of course the war in Ukraine. Russia is a bit slow in their progress, it seems, and it seems like Putin might have overplayed his hand a bit. But well, he's got the exact opposite result of what he actually wanted. He wanted to divide Europe, he wanted to divide EU and NATO. And what has happened? Well, we are all standing tighter, more collected than I can remember for the last many years of my life. So, well, there is that, and the war will probably keep going on. There are some negotiations, but to be honest, I don't believe that too much will happen there. But they are showing some sort of good faith. Russia offered some of the civilians, they could leave some of the cities. The only little thing they forgot to say was that the only route they could take was leading straight into Russia or Belarus. So that was not really an option for most of the civilians there. So it is a tight situation. There is some potential of it getting worse, but right now, to be honest, I think Putin is getting at least somewhat motivated to negotiate. So let's see where it happens. It is a tough situation. And if we're looking at the markets right now, well, here we have Nasdaq of today. That is not looking too good. It is down 2.5% for the Nasdaq. We can see the ES, that is the S&P 500, also down some 2.2%. We have the Dow 1.7%. And then I have a lot of different things in here. We saw the US oil that spiked up heavily this morning. I think the UK oil was actually up at 130, just touching it, and now it has been sent a bit back. But that is, of course, with all the talk about banning the Russian oil and so on. That is a tough situation, and the European leaders have had their head up at some in some part of their anatomy that I'll not mention here, because they have simply completely neglected to see that Russia were making them dependent on Russian gas and oil. But that is how it is. We can see that the German DAX index was down or is down almost 4% today. And yeah, the FLP here, that is the gas futures, they are up. It is kind of a bleak outlook here. But let's have a look at what is actually happening in the world outside war, because there are something happening. And in just, 9 days, we are going to see the next FOMC meeting. The FOMC meeting is where Fed and Chairman Powell is going up and saying, this is our interest rate policy. Should we hike the rate? Should we cut the rate? And then a bit later, is it a week later, 2 weeks later, we get the FOMC minutes where we get some more details about the Fed members' different thoughts on why they chose as it did. All right, but for the next meeting here, this 16th of March this month, we can see that there is, and this is the market pricing in via futures and so on, we can see that the market is pricing in a 94% probability of a single rate hike, meaning from 0 to 25 basis points. Now, it is only you can see here a month ago, there was a 0% probability of no rate hike at all, but now the market is actually pricing in a 6% chance of a rate hike, of 0 rate hike, and that is, I guess, due to the situation in Ukraine that has a potential to send the entire Western economies, of course the Russian economies because of the sanctions, but the EU economy and probably also the US economy has the bleak potential of getting sent into a hard recession. And now, when we're looking at a recession in a territory, financial, economical territory like this, we are actually talking about something called a stagflation. And that is where you're getting a recession, meaning 2 quarters in a row with negative GDP growth. I'm not certain we'll see that, not in United States maybe. I'm pretty sure we'll see it in several European countries due to the extreme spikes in the gas, natural gas and oil prices. So I think we'll see Europe go into recession. And when we see that, and at the same point have a rising inflation, then we actually have what is called a stagflation, meaning the central bank would actually like to hike the rates upwards because they want to lower the inflation, but doing that they'll send the economy into a deeper recession. So they, on the other hand, they actually want to lower the rates to spur up some growth in the economies, but doing that they will accelerate the inflation. So it is an almost impossible situation, and this can be really, really tough to live through for many European countries. All right, if we're looking up at the 4th of May here, you can see that there is the majority that thinks we are up at least 2 or 3 times here. So yes, but the 16th of March is very interesting. It is in a few days, and we are also seeing some inflation numbers, and I definitely think we'll see at least 1 rate hike this next week here in 9 days. And the reason for that is the inflation in the United States. Have a look at this. This is terrible readings for the Fed, 7.5% in inflation. And if we look at the next inflation numbers coming out the 10th of March here, that is in 3 days, that must be on Thursday, you can see that the previous, that was 7.5, that is this number here. And then the consensus is actually that the inflation will go up to 7.9%. That is not good news. But let's see what happens. We could hope that it actually stays around 7.5 and shows some indication that it might drop, but I have my doubts also because the PPI, which is the producer price index, meaning the inflation for the producers, for the manufacturers, that number has in United States been around 10-11% lately, meaning that the cost for the companies are growing at a yearly basis at 10-11%. In Europe, it was 30.6% the other week. So we'll also definitely see some skyrocketing inflation in the coming month in Europe. No doubt about that. But this is the reason why I think that Powell has absolutely no choice but to raise the interest rate by at least 25 basis points, maybe even 50, but that is maybe not so likely. All right, let's have a look at the strategies that we are looking at. We have the weekly momentum, monthly momentum, and quarterly momentum, and we have the ETF strategy and the ultimate dual momentum that we have described in several of our videos. So let's have a quick run through here. We have the weekly strategy, and that one has actually performed quite well here in March so far, 1.29%. Now it has been the one that was hit the hardest here in the first month, but right now it seems to be gaining some ground again here. It have turned around down here. Now I know that with the markets we are seeing today, it might take a dive again, but at least it seems like the drawdown has stabilized. So that is that. I know some of you are following the weekly strategies. There's a link in the text below here to the 30 days free trial if you want to test that one out. Then we have the monthly momentum strategy. That is year to date at a minus 16% here. Also, we can see the drawdown has leveled out down here. And we can see that for March, it is up by 0.81%, which is great. We might be sending negative territory again today. But let's hope for the last 3 weeks of March that we'll see some positive momentum so we can have a green month finally. All right, let's have a look at the last one of the stock momentum strategies. That is the quarterly momentum. That is a bit more down than the monthly because the monthly have reallocated into new stocks, new momentum stocks here at the 1st of March. So therefore it is a bit more updated. But personally, I am I am tilting towards a quarterly momentum strategy myself, because I do like the thing about giving the stocks a bit more breathing room, as you know if you have followed my videos here. 17% this year. It is a rough drawdown, but again, we are sitting in the midst of the worst case perfect storm you could imagine. A war, high inflation, interest rate hikes, and so on and so forth. It is really terrible, looking at potential stagflation all over the world. So what can we do? Now, this one is down 0.84% here for March, but we will reallocate in April here. So again, we are looking at 17.44% in year-to-date return here. Absolutely not the best, but again, it is how it is, and we need to follow the models. Last year it made 28%, even though we had a couple of rough months here. So I am very confident that we will end the year in the positive, but maybe not 28%. That is impossible to predict. All right, the next two strategies, the ETF strategies, we have the normal ETF strategies that we have been showing for actually a couple of years on different YouTube channels here. We can see that that is diving down still, and one of the reasons for that is that one of its positions is a short in oil, which is not the best position to be in right now, but historically it has been performing very well with this position as well. So right now we are in a very special situation. And we can see year-to-date 14.7%. Normally, this strategy is a lot more conservative than the stock momentum strategies, but right now it is really hit hard by that short oil position. We can also see it here that it is taking a 3.25% drawdown in March so far. All right, actually the best of the strategies so far this month has, as far as I can tell, been the ultimate dual momentum. You can see the videos on the channel how we have constructed this. It is only down 7.77% this year. And looking at this, well, it's not the best for March so far. It is 0.64% up, but it is the best overall for the year. And this actually has a potential of going into positive within a couple of months here. So as you can see, the drawdown bottomed out here at the end of January, and but since then it has been zigzagging a bit here, but moving up slightly. It will be interesting to see how it's dealing with March here, and the other strategies will probably take a turn to the downside today with the market we are seeing right now. That's all for today. I won't take any more of your time. Take care of yourself and your money out there, and I will talk to you again shortly. Bye for now.